Okay, we're now joined by Mark Mountan, without the I, from Capco. So Mark, thank you so much for joining me, and thanks for. I know I'm literally I'm grabbing people out of the event just to come and explain a bit about what they're seeing today at this event. So we're at the Canadian Lenders Summit today, which is everything from mortgages to car loans, everything in between, and we're seeing some really interesting fintechs, what the traditional banks are doing, how tariffs are affecting people across Canada, particularly in the automotive space. So there's a whole lot of stuff going on. But you were on a panel earlier on, which I sadly missed because I was in the studio. But tell me a little bit about what you were talking about.
Yeah, the panel that I was on is really having to do with marketing, and specifically what's the impact of the growing regulatory climate on marketing and being able to engage customers into one-to-one personalized way. That was our key area of focus.
So is there legislation that's stopping people doing that, engaging? Because people want personalized marketing, and you want something that, because algorithms now mean that you can be in social media, talk about something, and then they kind of target you when you're in that thing. So the Alexa is always listening. So is there regulation that's preventing some of that?
Well, certainly there are. I mean, here in the States, in the States, you have the GDPR. There's a broad range of other CCPA regulations around cookie use, around
CCPA?
targeting.
Is that what that means?
CCPA, yes. That was coming out of California. And that one in particular really just talks about that you have to provide consent to consumers, that you're dropping cookies, you're tracking them, and you're gathering information about them and giving them an opportunity to opt out. And so what we're seeing is this expansive regulatory footprint is really changing the way that lenders and large institutions target their customers, gather information about them, use that information to identify new audiences for new campaigns. So which that translates then is, whether it's marketing teams, it's servicing teams, it's product onboarding teams, they have to get really creative around how they interact with their customers, so that they're not in violation of what the customers have said they want to be targeted with, or how their data is used.
So if you misuse some data, what happens if you kind of target someone that said they don't want to be targeted?
Well, it's interesting. It's a great question, because even though the regulation is broad and says you have to provide full disclosure and you have to give the individual browser, whether you know that person or not, but somebody coming to your web or mobile, you have to give them disclosure that you're collecting information. The regulatory footprint on the backside of that is different depending on what industry you're in. So specifically, my key area of focus is in financial services, where the regulatory requirement is very, very high. So if you misuse that data, you can come under deep regulatory scrutiny, whether that's from the Consumer Finance Protection Bureau, it could be from the FDIC, various other banking regulators at a state level, and it can be significant reputational risk. It can be substantial fines that you're paid. So there's a lot of penalties and repercussions of doing that. And then, of course, now it's putting more control of customer data into the hands of the individual, so that I could say, hey, you need to tell me all the data that you have on me, and if you're unable to produce that, then there can be repercussions from a civil court perspective as well.
I mean, you're treading a really dangerous line, I suppose. We've seen it in the UK, particularly around disclosure of commissions. So actually, if you're not disclosing the commissions, and in every other walk of sort of financial life, you have to be really transparent with, if someone gives me independent financial advice around my pension, they disclose what that's costing me in terms of every time you put some money into your policy, I'm going to take 0.01% of your contribution. And that's the cost of my advice to you. So there's always, there's a way of doing it. So in terms of how you're advising companies then, what steps are they taking, or what do you have to ensure they do is just make sure that they set their websites up in the right way? What are the actions that they take when it comes to marketing?
Well, there's a few. I mean, the first obviously is just basic compliance with cookie and consent collection and how you're collecting that data. But then the other is really having a clear pipeline of visibility into the regulatory change, because the regulatory pace of change is very, very high, and most institutions can't keep up with how fast the changes are coming, and then be able to synthesize that and make choices about that to make sure that the way that they're continuing to go to market is remaining compliant with those regulatory changes. So you spend a lot of time advising them that you need to have data feeds, you need to have, now with AI, being able to deploy it against those regulatory changes to say which ones of these actually have an impact on our marketing campaigns, on our servicing channel, on our product onboarding channels.
One of the panels that we did here earlier on was very sort of startup, very kind of innovative, and they were battling against traditional banks, but they were being really innovative and agile with the way that they allow consumers to be quite flexible with their finances. So you've got like in-application stuff now. Does that make a difference in how you market to people? If you've already kind of got an app and you're using a digital bank, I use Monzo, I can flip money between me and my kids regularly, need to draw down on Bank of Mum. But it's just, but they can then, one of the things they talked about that was, I thought was really innovative was how you can start to think, at the moment I have a pot where you can top up, you can just round your money up and that goes into a pot. You can now do that in like wealth management or other things.
Yeah.
Does that, is that a way around the regulation because it's in the application, so you assume consent, or do you have to go about assuming or getting the consent throughout that experience with consumers?
So it's interesting. It's a fantastic question. You do and you don't. And what I mean by the don't is there's a sense in which previously captured consent, like the regulation allows for previously captured consent to remain persistent as long as you're working within the parameters of what that consent was given. So if you're introducing new features, so you gave the example of being able to round up or top off or what have you, right, in different use cases, those things you shouldn't have to resolicit consent for. However, invariably what we're seeing is the regulations change substantially enough that now that use case does need to be revalidated. And that's just creating a lot of work back, particularly in mobile, for redeploying those apps and rebuilding those features in. Now, I mean, obviously with AI, and of course, everybody's talking about vibe coding and be able to code very, very quickly. It's reducing the life cycles of re-updating those features in order to be able to remain compliant from a consent perspective, but the effort is still there.
Okay.
Yeah.
So it's a lot. I mean, there's a lot going on, isn't there? I suppose you've got to make sure that you're as up to date as you can be. I think the other use case in automotive that I think was really interesting is how we, in the UK, we see a lot of this, and we're starting to see it emerge in Canada now. We're working with an OEM to help them improve loyalty through retention. So at a certain point of your finance deal, the equity becomes so that you can maybe change out of that vehicle and go into your next one. So you'll market to me before my finance term has finished.
Yes.
So, and therefore offering me something the same as or better for a similar amount to what I'm paying now.
Right, to incentivize.
Yeah. So do retailers need to be mindful of the permissions they have to capture, or the dealers with the lender, but also the OEM will be selling them a new vehicle? So there's this kind of tripartisan way of the retailer, the OEM and the lender wanting to ensure the customer gets the best deal or they get into the next finance agreement.
Well, certainly any of the financial regulatory requirements would persist in that sort of, I'm going to call it a multi-tenant deal, because you talked about different parties that were involved in transacting that.
Sure.
That's a little bit different than customer consent. So the customer consent requirement that we're talking about is a little bit less in that scenario.
Sure.
There's the whole compliance with who can you lend to and under what thresholds and what credit conditions and things of that nature, for sure. And I know those are different in the UK than in the US. However, the question of how do we engage the customer with this? How do we put that offer in front of them? I think probably the biggest regulatory impact to that, it's less about, are we putting a message to them or this or that marketing channel, whether it's email or it's mobile or it's text or what have you, and it's more about the disclosure. So when you think about the disclosure that needs to go around that lending offer, is that disclosure approved? Is it legally, is it compliant with internal legal standards from the different brands that are offering that? And then of course there's the regulatory piece of that. So it's not so much how do I engage the customer in this scenario that we're talking about, but it's more the disclosure and the transparency that you're creating around the deal or the offer that's being presented to them.
So I suppose it's just the thing that I'm hearing is make sure that you familiarise yourself with the regulations that you have to be close to and work with your lending partners, because they will be obviously, they're regulated in the way that they need to be. It's just making sure that you understand, well, your customers are other lenders anyway, aren't they? So
100%.
Sure.
And I would actually even go to say, I would ask your lending partners, what do they do to ensure that what they're doing is regulatory compliant itself, right? Like how are you staying up, lender, with the continuous flow of regulatory change.
Yeah.
And how are you processing that? And then how are you taking those regulatory changes and making sure that those are pushed downstream into your platforms so that as I'm leveraging what you offer to me, and maybe it's not just capital, but how I get to that capital or how I get to that loan, is that compliant?
Yeah.
And if they don't have answers to that question,
Work with someone else.
work with somebody else.
So yeah, but you're absolutely right, isn't it? So their job is to make sure that they're compliant and they adhere to that. Because so it's really be careful who you partner with and make sure that you know which questions to ask and that you're kind of pushing back on that, because as you market to consumers, if you're not sticking with the rules, then you could be in trouble.
Right. And I mean, hopefully those lenders are all going to be in the up and up, right? They want to make loans, but then they also want those loans to be legal. They want them to be viable, and they want to continue to grow their brands. They don't want to put their brands at risk. However, if you don't ask that question of the lender, nobody else is going to ask it except for the regulator. But by that time, it's too late for them. It's potentially too late for you.
Yeah, exactly.
Yeah.
Okay, that was brilliant. And thank you so much. I really enjoyed that.
Yeah,
Mark. So
it's great.
That was Mark Mountan from Capco. And thanks very much, Mark.
Yeah, absolutely. Thank you.
Cheers.